Today I have taken on a new challenge. In this video I'm going to reveal exactly what this challenge is, why it's a difficult challenge and what's going to be inside my brand new investing portfolio. But before you start commenting saying that I'm trying to cover up my losses on my ISA portfolio, I'm going to expose exactly why I'm doing this challenge. I want to develop my investing skill set further, and I believe that taking on another portfolio could help accelerate this process. However, it's difficult to take accountability for a portfolio that doesn't contain a majority of my wealth. So by uploading monthly update videos, the core of YouTube opinion means that I can remain accountable for my investing decisions. Oh, and I think this will just be a fun series as there's some big consequences on the line. So what is my goal for this portfolio and what rules do I have to follow? Well, I want to build a dividend growth portfolio, ideally balancing passive income and capital growth. My goal is for the capital growth to exceed the market average return, and then ideally having dividends in the background to just add to the compounding like a cherry on top. My target is to reach a dividend income of £500 a year, which is the dividend tax allowance for 2024 onwards in the UK. Yes, you heard that right. I'm planning to invest outside of a tax wrapper. I plan to take advantage of these tax allowances and utilize an active strategy inside a general investment account. But I have also created 4 rules that add a challenge to this portfolio and make it interesting. So here they are. Number 1, I can only invest 50% of my income from YouTube, which is adverts and memberships. So definitely click that join button down below if you'd like to support this portfolio's growth. Number 2, I can only invest in dividend paying stocks. If a dividend is suspended, I have to sell that stock as soon as possible. Number 3, I must buy or sell an entire stock position every single month. Number 4, I must hold less than 20% cash by the time of recording each episode. If I break any of these 4 rules, I am subject to a forfeit. So what are the consequences of this portfolio challenge? Well, I will spin a wheel of consequences from your YouTube comments. So you get to choose exactly what it could be, but please note that it needs to be professional and not degrading, but everything else is fair game. However, if I don't break a rule, then this could be pretty boring. So I've upped the difficulty and added 2 performance targets on top. Number 1, I must outperform the S&P 500 each year. If I underperform the S&P 500, then I face the consequence of the year. Imagine a task that David Goggins would come up with. Some examples might be running a marathon, getting in the ring with a professional fighter, or jumping out of a plane. Number 2, I need to make more YouTube income than the previous month or I face another consequence of the month. Plus, each episode this means I have to reveal my YouTube income, which most YouTubers are too afraid to do. Therefore, I'm going to show you exactly how much money I made on YouTube before revealing what's inside my new stock portfolio. In December, I uploaded 5 videos, which have gained in total 11,900 views. This means that YouTube has paid me a revenue of £143.89. I've taken 50% of this amount and rounded up to the nearest pound, which has meant that I have deposited a whopping £72. So what stocks have I bought with my YouTube income? Firstly, I took advantage of Trading 212's cash investments. They offer a 5% interest rate on GBP by investing my spare cash into a qualifying money market fund. I'm happy to let this work in the background as I look for new stock investments, and also for tax purposes, the money received counts as interest. As for stock investments, I'm taking it very slow. This might mean I lag the market performance in the short term, but I'd rather find new opportunities to buy very slowly, but sell very quickly. I believe I've been very quick to buy and very slow to sell in the past, and I want to adapt and improve my strategy. So far, I've built a watch list of over 20 stocks, and I plan to considerably increase this list over time. But I have started by buying these stocks to add a defensive core to the portfolio. Over time, I'd like a majority of my portfolio to be invested defensively in hopes that they'll closely track the market, and then I'll utilize these smaller but higher growth positions to hopefully get our performance above the S&P 500 bar. The first stock is very well known, and it's held by Warren Buffett himself. I bought this stock because it's an established business and has high profit margins of over 23%. It has great cash conversion and will very likely likely be around in the long-term future. This stock is Coca-Cola. Another stock that I've bought is considerably smaller in market cap, but has a large market share across some major economies, including the US, UK and Canada. This is a stock I hold in my main investment portfolio, and it is up 6% since buying it 2 weeks ago. This stock is Ashtead Group. And if you'd like complete access to all of my stocks and shares, there's a link in the description down below, which you can click to see all of it for free, so go and check that out. But technically, you're going to look at my portfolio right now and you're going to see that I have broken one of the rules, which has meant I have more than 20% cash in my portfolio. As it's the first episode in the series, I think that's okay, and I think you should let me off on this one. But if it isn't, then you're going to need to tell me by leaving a comment down below alongside the consequence that you think is fitting. But you may be more interested in finding some new dividend stocks. Do I know of any good stocks? Well, yeah, click here to learn about these free high-yield dividend stocks.